with Saul Shaul, your host and mentor. We're getting all set up here. Normally, we'd be on the trading floor in Chicago, the trading pits. Our focus here is on the S&P 500 E-mini. We're looking to do 2, 3, 4, 5 trades during a good trading morning. Right now, it's 9:17 a.m. on Wednesday, March 10th, 2021. Everything we do is for educational purposes only. Nothing is to be taken as direct trading advice. Your trading is done between you and your broker at your own risk. We're here on a daily basis. We're actively scalping, looking to do 2, 3, 4, 5 trades based on a price action trading strategy. It all starts out with Saul's trading plan for the trading morning. Saul looks to set key areas or key levels or zones, he calls them. He sets them right around the cash open. So the tick-tock is that Saul's going to pop in. He's going to give out this morning's levels. You have the opportunity to write those levels down, load them into your software. If you need software, let us know. We're glad to set you up with an opportunity to receive a trading platform and real-time data. We'll help you get set up with your charts. Check out Saul's charts. He's got 3 charts in a separate chart window, 2 time frames for the S&P 500 E-mini, and a 30-year bond chart. Again, this is a opportunity to receive focused E-mini scalping intraday trading for the morning session. It starts out with Saul popping in, who is your mentor and your host. He has been trading for 25 years or so. He is actively scalping the S&P 500 E-mini for his own account based on a price action trading strategy that he has developed over the last 25 years or so. Got a nice group of traders in here, whether they're new traders or experienced traders. New traders get set off on the right foot and don't have to waste a lot of time figuring out if they can trade. They can really focus on where the rubber meets the road at the price action level of the trade. And we have experienced traders that are looking to restart their ability to make profits in their trading, or focus on the ability to make profits in their trading by narrowing down their focus again to where the rubber meets the road at the price action level of the trade. So right now it's 9:19 a.m. or 9:20. Saul's going to be stepping in shortly. If you have any questions, don't hesitate to ask. If you're coming in from the outside, look for that link. It says login free now at www.zoomitlive.com. It brings you to a page where you can register for the service, register for Zoom, and it pops you right in. If you like what we're doing here, tell your friends. Got a lot going on here, both publicly and privately, for those that want to learn to trade the markets as a living. Focused on the S&P 500 E-mini. Take a look at Saul's charts and see how sort of sparsely, or I should say how uncomplicated they are. Try to shed, if you will, for the purposes here, all the crazy stuff on your charts and concentrate on what he has. From Saul's perspective, his levels or zones are more important than the charts themselves. Charts are really a placeholder. He does utilize charts, but he doesn't like all the complication and the noise that When you are looking to get set up, you set yourself up with a lot of, how should I say, noise on your charts that are lagging, indicators that are lagging, various other things on charts that are lagging, and they become very distractive based on being able to really visualize and start to understand and develop the second nature in trading. So I'll be in and out in the morning. If anybody wants to sign up for Sol's monthly, let us know in by raising your hand. It's a nominal fee. It's just out of respect. You come in as a guest, welcome. You transition into a monthly, come and go as you please. So when Sol pops in, be prepared to write this morning's levels down or his zones. Starts out with a price, a pivot, and then there are other areas on top and bottom of that. Again, if you need to know more about the S&P 500 E-mini, join us live in Zoom. If you would like trading software and real-time data, let us know. We'll be glad to assist you. Hey, Ninja's great. Mohammed, you're all set. I think 8's the latest version, right? You really only need to have, um, charts, and you can see how simply Sol's charts are represented. You need to have, fast internet, reliable internet. You also should have a good order entry set up. So you don't really need an elaborate setup with all sorts of bells and whistles and noise. That's just our opinion. Sol's been doing this for a long time. He's developed a skill set that he has honed for his own trading, and he is sharing you that opportunity, sharing with you that opportunity. And you have the opportunity to stick around by being part of Sol's monthly. And again, if you're interested, raise your hand. And we certainly know who's been here and who's not been here and what the opportunities are. Hey, Casey. Casey's using the Infinity Online platform. Mohammed is using the Ninja 8. Casey says that the Infinity Online platform is super easy and internet based. Thank you all for that. You know, price action trading's been around for a long time. I consider it the last bastion of hope for traders, but that's just my opinion. You know, when you've tried all the standardized software, you collect a lot of various systems. You know, pay attention to Sol's commentary in and around his levels. And again, Sol loves questions. So when he pops in, make sure you let him know that you can hear him. And during the morning session, don't hesitate to ask him questions related to the trade. Also understand that he has an intensive, which if you're interested in, he takes you under his wing and teaches you his methodology and then supports you as you are applying that technology based on your relationship with him and his intensive.
All right, good morning, everyone. Can everybody hear me all right? All right, fantastic. Let's give you our levels here for this morning. Our pivot this morning is 38.96. Support 89, 90, 74, 66, 58. And resistance on the upside at 06, 14, 23, 28, 35. Pivot 96, resistance 39, 06, 14, 23, 28, and 35. Support below at 89 and 80, 74, 66, and 58. All right, market here continues its rally here from this week with the passing over the weekend of the new package from the White House, 1.9 with a T, and seems to have infused some volatility into the market to the upside, and it's basically just having a continuation rally here going forward. So we'll see where it takes us. All right, we did have 7:30 number that came out this morning, the inflation number. You can see the market liked it. Both bonds and the S&Ps rallied. Again, when the bonds and the S&Ps move together, not the best of scenarios, at least on the downside, that's for sure. So that's what we're dealing with here with watching of interest rates. It's a key market mover. If you look at the levels in chat, if you look at the chat box, the levels will be there. Did you see those? And we quickly drifting around, coming back here to our pivot, kind of trying to feel its way here in the first couple bars. Always like that in the first couple bars in the morning. And we'll see what it wants to do. Welcome to some of the new folks that are here. We are trading mini S&Ps here. Trying to take advantage of areas of inflection, which means we believe the markets don't go straight up or straight down. They have areas where we feel the market will rotate off of. Those areas give us an opportunity to scalp the market and to take advantage of the those ebbs and flows in the market. We look for about 2 to 3 points on our trades, depending on volatility, depending on how you get in. Sometimes you get more. On the positive side, we try to keep your stops, solid, so we don't get run over at any moment in time if we're not correct. And that way we are able to control our losses and try to maximize our profits, because we have the ability sometimes, if you obviously are trading multiple contracts, to be able to take more than 2 or 3 points on a trade. Again, if you're taking trading multiple contracts, it takes a little bit of time to get there. If you're new to the business, if you're not and you've been there a while, we'll try to expand your ability to maximize your profit with maybe a new methodology that you can incorporate with your own stuff. Either way, whether you're new to business or you want to learn about it, or if you've been around a while and you want to add some new techniques, this is where we have our education course for you to be able to expand your horizons and or learn about any of this stuff. That's what we like to do here, and we do it here on an everyday basis. We're here on the floor. I keep saying that, but we're not on the floor obviously anymore. We are in my floor of my basement, I guess. Anyway, but that's we used to be on the floor of the exchange, but due to the world pandemic, we are situated firmly in my basement, which really doesn't hurt us that much. We just have to adapt to what's in front of us. Hopefully, we have. Not the end of the world. So we'll see if we go back. I don't know. It's one of those question marks. I don't know if the exchange wants to open it back up, but I don't even know if I want to go back. If they do open it back up, it's one of those, unknown questions right now. Right now, we have to see if the exchange opens up. I mean, I think they want to. Only the exchange. Yeah, the question always is asked of me: why is the exchange even open? Right? You really technically don't need it, correct? But I think they open it in case, or they want to have it available in case of catastrophic emergency, meaning some kind of grid failure or something like that. You can always fall back on open outcry, because the pits are still there. You'd have to make a couple adjustments, and you'd be able to. They have, when they built the new building, which now was in the 90s, mid 90s. They took into account the possibility of some kind of grid coming down and us acting independent of that. So they have the ability to, and I think that's the only reason that they're still keeping the exchanges, or the floor, I should say, viable, so that people can have the ability to trade if to manage risk, right? That's why you're trading. You're managing risk. At least some of the big guys are anyway. We are trading just to scalp and make money. Some others are trading to manage the risk, and that's why at the end of the day, that's why the exchanges are alive and running, because they're out there to manage risk for either portfolio people, investment people, or banks, all that stuff. They're out there managing risk. That's what you're there for. So we'll see what happens. Anyway, I digress. Sorry. Market again coming back down here to our pivot. Support level on the downside we have is 89. You're a pivot player, maybe you're participating here just a little bit. It's small. You don't have to trade the same size every time. You can, if you're a multiple contract individual, you can trade. Adjust your size based on the risk. And that's what that's what we. That's the nice thing about trading multiple contracts. You definitely have the ability to adjust risk and try to take advantage of maybe some price action opportunities that may be a little bit riskier depending on the time, depending on the situation. Everything's a little bit, dependent on all that kind of stuff. And we talk about um, 89. Oh, and the right. And the levels that were printed in the chat box, the support level is 89 and then 80. All right, if you did dip your toe there against our pivot, like I maybe suggested, you got a nice rotation here to the upside. Thanks there, Timmy. There we go. There's the adjusted, correct. Thanks there, Mark. This is teamwork. Teamwork. Perfect. I love teamwork. That means people are looking at the chat, people are listening to it. It's a beautiful thing. Teamwork's just a beautiful thing. It's what this room's all about. I miss a trade, someone should tell me about it. If I miss something, you should share. That's what it's all about. That's why we're here. All right, so again, depending on how aggressive you are, if you did jump in there a little bit around our pivot, you get paid off here. Again, we're trying to find areas of inflection to find reasons to trade, and that was one of them right there. We had a nice little opportunity. If you were a little, I mentioned it, to be a little aggressive. If you were, then you bought the pivot there and got a nice little rotation off of it. So maybe you did, maybe you didn't. I don't know, but that was one opportunity for us. All right, so we did have inflation number come out this morning, which obviously was consumer price index, which wasn't didn't blow the number out of the water. Maybe they were expecting a lot worse because of all the talk that's been going on. Is it more aggressive risky to only get in 1 point before a level? It's aggressive, true. Again, obviously risk tolerance is an issue, right? Question really is, do you can't really look at the NASDAQ. The question is, are you going to scale? Okay, so if you're going to be scaled, then it's aggressive, but it's also adapting to the risk in the market. If you're not going to scale, then your mindset has to be a little bit closer to the level, maybe a half point above and below. So yes, it's a little bit more risky. Is it aggressive? It's a little more aggressive. The question is how many contracts you're going to trade. If you're going to trade multiple contracts, then scaling in a point above and below is not so bad. It's not as aggressive. But if you're trading just one, that would be very aggressive. True. The NASDAQ's coming down, but the ES. Well, it's very difficult to trade the NASDAQ or to follow the NASDAQ. I mean, if you were with us the last couple of days, the different dynamics are going on there in the NASDAQ and the ES. There is a turnover or a cyclical move coming out of the tech stocks right now because of the thought that the pandemic is going to the stocks that were making money in technology are going to not be as aggressively positive or go up as much after and when the economies come out of the pandemic. So there is a shift from one group, NASDAQ technology group, to more cyclical kind of traditional stocks that maybe were beaten down during the pandemic. So there's a rotation that's why if you're following the NASDAQ and you're trying to trade the S&P, is not really a recommendation that I would suggest here. I think the other day the NASDAQ was down over 10% correction area, and we were up. So nothing. Sometimes it's nice to correlate, but never love anything when you're correlating one market with the other. Watch it. Maybe sometimes you get a correlation, maybe you don't. But if you find something and you think it's always going to work, it's not always the case. So that's why we don't, when we do our work here, we're not really focused in on anything. We kind of let the market tell us what to do. I mean, always somebody's always trying to get something like, some other market to kind of tell it what we're going to do, right? There's always like this, oh, I got this. When the oil market ticks down, we're going to tick up, or vice versa. Let's just focus in on what we're doing, and that way we don't ever, it's always like another market that's going to affect us for a short period of time. And if that happens, fine. Don't love it. Don't love the correlation. Just trade. See what our market is giving us. We had a nice couple rotations here down to our pivot, which was a buy area a couple times. I suggested it 2 or 3 times already. There's a reason that you could have bought it down there. There's no reason to look and say, what am I leaning on? The thing you should be leaning on is the price action that we're teaching you. And if you can understand the price action and why that you're buying these areas, then hey, that's all you need. You don't got to worry about looking at the NASDAQ or looking at the oil market, or look at the bond market, or look at whatever, looking at the MACDs, looking at one indicator or another. There is my tirade on looking at other markets. Focus on this one, learn how this one moves, why we're getting into these trades. And I think you can be better off than trying to get a little hint from another. Not telling you not to look at those other markets. I'm just telling you, if you want to focus on ours, maybe the other markets will give you more confidence in one of our levels that we're looking at. And you could use that as a crux. But to say that the NASDAQ's going down or we're going to follow, not always the case. Or any other market, doesn't matter. When I'm in a trade, you focus on the 5-minute price action. Well, I mean, when I'm in a trade, I'm looking at, I guess what I'd be looking at if I was looking at the market would be where my exit strategy is going to be, right? So that's what I would be looking at on the 5-minute to get my exit strategy. Now, remember, my exit strategy is almost predetermined by my entry point sometimes. But if I have a finger stop and I'm going to, get daring as we come up here to the 06 area, if I'm going to get daring around a level, then maybe I would look at the 5-minute to help me. But that's only for my exit strategy, I think. If I'm in a trade. In a trade. Remember, there's a difference between looking for the trade and being in a trade, right? So, all right, we're working this 06 area here, trying to see what it wants to do. All right, nice rotation there off of our 06. No pain whatsoever. Gotta love those. I love those trades. They're easy to get into. They even got a 6 1/4 out, a 6 even out, but they traded 180. Should have got in at 6 if you traded the 6. So there was no reason there to miss the trade. If you just put it at 6, again, if you scaled in, you got a nice rotation, went down to 3 and change there. So even if you got in at 5 and 6, you got a nice little rotation, easily 2 or 3 points. This is what we're trying to do here. We're trying to take advantage of our support and resistance levels, and also the ebbs and flows that occur with price action. Now, obviously, when I suggested that we buy the pivot there was a reason for it. Any trades that I suggest or tell you or talking about usually is a reason. There's a reason for it. We suggest many reasons to trade. Some of them are obvious and some of them are not. There are multiple reasons to trade, though, during the course of a day. What we're trying to do is give you confidence in putting in your trades and to be able to find those levels. And the more you have reasons to put on a trade and the more confidence you have, the better you'll be able to execute that trade with, not be scared to put it in. And then, the more you see something happen, the more you're making money, the more confidence you get. Hopefully, that's what's been happening here, because we've been really doing well here the last few days. Knock on glass, because that's my tabletop. But we came up here. We had a little buy there again. I can't stress enough that people want me to tell them what I'm trading or how I'm trading. I think I mean, yeah, I'm just pretty much telling you. Sold to 86 area here, which is the high. Nice rotation if you're trying to stay long. If you're trying to stay long, you have to have trade multiple contracts. And if you trade multiple contracts, you scale out of them. Nice little dip down to even there. That's where I would have got out if you were in. And if you're trying to get out, take a little bit more out of the trade, then maybe squeeze it down to our pivot there. Either way, just have a stop in or trailing stop on anything else. But you need to trade multiple contracts to be able to do that. And if you can, then you can take advantage of this nice little rotation here off of our 06 area, which is surprisingly the high. And you could have got in. I mean, the 100, 200, it went up there again, 250 traded up there. So no reason for you not to be able to get in there at the 06 to sell, right? And we like to get it up. We like to get into the trade right away, right? That's why we have our orders kind of in the market versus watching it get to 6 and then deciding whether you want to get in, trying to understand whether the market is going to stop or not stop. You got to have faith in what you're doing and confidence in the ability to trade those areas. And if you can, then you just put the orders in there, because you get one chance sometimes and you're not going to be fast enough because the algos are just a little bit too quick or the computer programs are just a little bit too fast. It's just the nature of the beast, that's all. So that's what we're trading with here. We do have a small number coming out here, the Atlanta Fed business inflation expectation number, 9 o'clock, top of the hour. I don't know if it's how big a number it is, but it is a number. And anything to do with inflation these days could result in some kind of movement in the market. Since we are looking at other markets, maybe to consider, if we're going to be trading us, and if there's going to be something that we have to be concerned about with other markets and affecting our market, is going to be the bond market. And at 12 o'clock Chicago time today, there's going to be a 10-year note auction, which auctions have not been something that we've been concerned about, but lately, because of the conversation, the focus has been on the yields, how well they're received, how well the $38 billion is wanted. A bit to cover ratio is what they call that, and that's what they look at to kind of help you with the reaction in the auctions market. Okay. Again, if anybody has any questions, feel free to ask. If we were trying to, if you were asking me, the market's going up, where did I get long? Well, we had a little buy there against 96 a couple times. If that's what you were asking or thinking. But again, we're scalping, so we're not necessarily trying to hold on to anything like that. But again, we did have a nice rotation off of our first resistance area there at 06. Some of you who are coming a little bit late, we're going to, if you look at the chat box area, we're going to have our levels. There they are. These are the levels that we've given out before the market opened up. We use those as a guide. Nothing's etched in stone. Remember that. We adjust these. We can adjust down them, up them. We can cancel them. They're just a guide to the day. And then we let the market kind of start trading and then use the price action opportunities that occur to help us. So the inflation number that was released at before the market opened up has obviously the market has taken that in a good positive way. We do have a small number coming out here in about 6 minutes. Again, I preface that by saying usually it's a small number, but because it says inflation next to it, we will consider that as a bigger number now because that's the talk, right? That's what's happening. And then at just FYI at 12 Chicago time, if you're still going to be trading by then, the auction results of a 10-year, $38 billion is going to be infused into the market, and that should affect obviously financials, but it could affect us because, like I said, the new buzzword that the market is concerning itself with is inflation. So obviously bond yields have to do with inflation. Bond yields have been moving the market, our market, even though we're almost at our highs. So take that with a grain of salt. All right, so we're coming back up here. So, and again, anybody have any questions, you can put them in the chat box area. We do like questions. Continues uptick here. Our next level of resistance we have is 14. Well, I hope you made money on them. All right, Todd. Well, that's close to what we have. Let's make it happen. You better tell your governor to keep paying his electricity bill. No, that's not good. All right, got up there to 11 and a half, and we were looking at the 14 area. Remember, I say anytime I say level is an area, right? It's important to understand that we're not going to be perfect. How you get into that area around the level is what's important, and we talk about that as with each individual trader, because everybody's got different risk tolerances, and how to manage those is important. All right. We do have a number coming out here momentarily, so we don't have anything on right now, so maybe that's a good thing. Market is coming off here, got up to 11 and change, coming off here a little bit. And numbers is going to come out here. Like I said, not usually a big number, but because of the inflation and title, Atlanta Fed business inflation expectations could be a little bit of a mover, especially when the market looks at it that way. So numbers going to be out here momentarily. So again, we're flat. We don't like to have positions on when numbers come out, and there it is. So it's kind of flashed up there a little. All right, we're just kind of bouncing around here a little bit. Support right now would be around the pivot area there, 95, 96 area. Congress is set to give the final green light to President Biden's 1.9 trillion with a T economic stimulus plan today, clearing the way for one of the biggest relief packages in U.S. history is being hailed as the centerpiece of Biden's first 100 days. That includes $1,400 payments to most Americans, expanded unemployment insurance, funding for schools and public health, state and local government aid. The legislation also includes a per-child cash payment of $3,000 for 1 year, an expansion of Obamacare subsidies for 2 years, as well as aid for restaurants, agriculture, and small businesses. The consensus among economists is that the stimulus will boost the economy and supercharge the recovery. A forecast from Moody's says The plan can add up to 7 million American jobs, which is important given the level of unemployment, while the OECD, Office of Economic whatever, I don't know what the rest of it is, said Tuesday that the program highly enhances the economic outlook even outside the United States. But there are those who have raised concerns that the sheer scale of the spending could lead to a spike in inflation, as well as the deficit hawks who have expressed worries about additional borrowing, and that might mean for the national debt, what that might mean for national debt. Where were these deficit hawks when they were giving away that tax break? Amazing how they just completely disappeared. Deficit hawks that you wanted them to protect deficit disappeared when they had that tax break with Trump. I don't understand. Where are they now? Oh, they reappeared. Amazing. Absolutely amazing. So let's stop with the hypocrisy. These people are just, these politicians are getting really old and they're BS. Anyway, that's my take. That conversation is also playing out in the political sphere, where Democrats have dubbed it the largest anti-poverty measure in a generation, or what the White House press secretary called the most progressive piece of legislation in history. On the other side of the fence, GOP members have said that the package also goes too far in the expansion of public assistance, pointing out that only $75 billion, or 7% of the total 1.9 price tag, which is directed at COVID testing, contact tracing, and vaccine distribution. So what? So it's amazing how not one Republican person voted for this. And it's amazing how they're going to reap the profits from it too, because I mean, I'm sure this is just not going to those people who voted for it. They don't say that anyway. The Pew Research Center polls released yesterday found that 70% of U.S. adults favor the 1.9 trillion coronavirus relief bill, including 41 of the Republicans and Republican-leaning independents, and 95% of Democrats and Democratic leaners. So 41% of Republicans and not one Republican in Congress voted for it. So what's going on? And assessing the proposed spending in the aid package, 41% of Americans view it as about right, while another 25% say it spends too little, and a third say the legislation is too much. The commentary is my own. So there. And I get an email every morning with the news bulletin stuff. And the commentary that I add on is my own. So priceless. Thank you. Thanks for the kind words. That's what happens when you make money in your first two trades and now you're waiting for the next level and you're not doing anything except talking. That's what happens with me. I get bored, so I read this stuff, and then you get to hear my commentary. It's amazing. It's amazing. Thank you, Casey. I appreciate that. You're talking to a person who's a Republican, and I'm just appalled by everybody's acting like they're so pious here. It's just, I wanted them to show up when they were having that tax thing with Trump 4 years ago, and they all disappeared. We didn't need it at the time, right? The economy was going good. And then now when you need it, because of the pandemic, 2 years later, who knew, right? Who knew that 2 years later you were going to have this pandemic and you actually needed to infuse all this money into the economy to keep it going? And then, whatever. Let's not go there. All right, Don, you happy? Back in January. Oh, good. He's happy. I'm always happy when Don's happy. Makes me happy. Back in January, reported usage of stimulus checks, which have provided a financial lifeline to millions of Americans. Though for others, they represented an opportunity to boost their savings. Okay, happens. And that was thanks to the $2.3 trillion CARES Act enacted in March of 2020 and the $900 billion stimulus passed in December, which provided $1,200 to $600 to all Americans under 75,000, regardless of their employment or financial situation. This one is a little bit different because they put constraints on how much money you're making, not just everybody. Securities trading was among the most common use across nearly every economic bracket for checks issued in April, according to the software and data company. For many consumers, trading was the second or third most common use of the money. Hey, what a beautiful thing. Did they come here, though? They didn't come here. I don't know where they went, but they didn't come here. Behind only savings and cash withdrawals. In fact, Americans that earn between 35 and 75 annually traded stocks about 90% more than the week prior to receiving their stimulus check. Wow. That's interesting. They're not trading futures, buying and holding. Hopefully they didn't buy in the NASDAQ. Well, maybe they did. They did buy in the NASDAQ. They did all right at the time. It was March of 2020. Yeah, they did okay. So hopefully they got out and they didn't buy GameStop. But it's got back up. Yeah. It's back up again. So it's good. I'm being very cynical this morning. It's okay, I guess. As there's not much happening in the market right now, just kind of floating. You got to find areas to buy them, right? 95, 96. Our pivot right now is, if you're looking to buy them, we had that area bought earlier this morning. We had our first level of resistance that got triggered. That worked out very nicely. And now we're just kind of trying to see where we want to do next. Are we going to go down? Are we going to continue to rally? The next level of resistance we have is 14. Who knows? If you know, let me know. I don't know. Again, we're trying to scalp the market. We're looking to get 4 to 5 trades in the course of a day. We've been getting a lot more than that lately. Markets have been very kind to us and giving us opportunities to trade with the volatility that's been injected because of this inflation talk. The market broke and rallied, broke and rallied. So it's giving us ample opportunities where we've been averaging, I would say, 6 or 7 trades during the course of a day over the last week or so, averaging, sometimes more, sometimes a little less, but it's been right up there. So we can't complain about the number of trades we're getting opportunity. And we're not going to make money on all of them, but as long as we get opportunity, that's all we can ask for. And because of the market volatility lately, in a good way, considering it's going up, it's very hard to trade the markets when it's going up. The markets don't get the same amount of injection of volatility when the markets have the slow rally to the upside. I don't know why. It just seems to be the nature of the beast. When the markets go up, and the VIX right now, somebody said, is down to 22. That's kind of low, but it felt like, I would say it hasn't felt like a 22 over the last week or so, even though it's come back here. So that's a good sign. So we'll see what happens going forward. We don't try to predict what's going on with these markets. We are just looking at every day as an individual day, and that's what we try to do here to help us make a little bit of money. We don't try to lean on anything. We don't try to predict anything. We don't try to come in with a bias. That's the worst thing you could do. Coming in with a bias is not helpful. So we are in the unbiased trading room. Right? Right. Okay. So somebody asked me how the minis and micros trade so close to each other. And I would tell you that by now, I'm sure there are a couple algos that are connected to each other that every time they get out of whack just a little bit, the algorithms will arbitrage it back into line. So there are arbitrage algorithms that probably are working in a split second to make sure that the prices are kind of moving in tandem, believe it or not. So there's one that is displaced by the other, it will quickly bring it back in line. So somebody did ask me about, well, how do these two markets who supposedly trade independent of each other trade so close to each other? And that's the reason. They do have algorithms out there. Algorithms is another word for a computer program to trade the markets, to arbitrage the markets, basically. Arbitrage is just keeping the two markets in line. So that is probably what's going on now. I don't know for sure, but from past experiences, there used to be, I'll say that there used to be traders who used to do that, and they would make money on it, obviously, because in the old days we didn't have these computer algorithms that were typed into the market as tightly as they are now, where you would you would manually do it in the pits, where one market got away from the other. You would have the ability to all right, if you maybe got in there against the 96 area there, blue band 97 maybe was the entry point, or however you scaled in, there would have had to be a 97 and a half area to get into that little level. So if you did wait and be patient and bought them down there, maybe. We obviously had 96, but we got down to 97 change, 97 actually, and pop back up here. So if you were looking for a place to buy, remember it's an area, all right? Okay, so that was, maybe you got in, maybe you didn't, I don't know. But that was the area where you had to find an entry point someplace. And I wouldn't do it now. It only happens the first time to it, so be mindful of that. Okay, Goldman Sachs, even recently raised its 21 net equity demand estimates for households from 100 billion to 350 billion, reflecting the faster economic growth and higher interest rates than we had assumed previously. Additional stimulus payments to individuals and increased retail activity in early 2021. We are in early 2021. I don't know, everybody, you do love the blue band, that's for sure. But we had two reasons there. You had the blue band and you had our pivot. So hopefully a couple reasons, maybe you jump in there. We expect households will be the largest source of equity demand in this year. You have really started to see the interest from the individual investors in a way that we have never seen before. Hey, there you go. Well, everybody hopefully is starting to get hopefully soon everybody will be able to get your vaccine shots if you want it. And definitely give you confidence to, at least for I know some of us, some of they don't even get out of the house. I mean, they're so, some people, I can't say that I subscribe to that part, but but you have to go out smartly and to have a mask and everything, obviously. But if you get the vaccine, this definitely gives you a little bit more still got confidence in going out. But hopefully, if for those of you who are really nervous and scared about it, gives you some relief a little bit, so that you're not so nervous and scared. I'm sure you're still going to be nervous and scared, but. All right, Dow's ended in the green while this is yesterday. Let's see, tech made a huge comeback on Tuesday, reversing a recent downtrend over the past few weeks as the U.S. Treasury yields appear to have stabilized. The NASDAQ ended up way up, 3.7%, matching the best day since November. And it's a big gain seen in Tesla, 20%. Twitter was up. GameStop was up. A day earlier, the index slid into correction territory, leading investors to bargain hunt. Gotta love that word, bargain hunt. Beating down shares. All right. The Dow also ended in the green, while the index climbed 0.3% overnight, though contracted. Contracts tied to the S&P flatlined, and the Nasdaq slipped 0.3%. This is overnight. This suggests the broader reflation trend, favoring higher rates in cyclical industries, likely remain intact, though the volatility could remain. I hope so. Concerns center around whether the additional stimulus from Congress would lead to greater inflation or higher growth stocks remain expensive. Investors will be watching today. 10-year note auction. Hey, we talked about that. Hey, for clues as to where yields may be headed, as well as the latest consumer price index. Well, the consumer price index was good. Nothing to worry about there. The obviously the yields on the 10-year auction later on today will be a concern. So we'll see what's what'll happen there. All right, nice rotation there off of our blue band, also our pivot area. If you were looking to get along, we suggested that's where you wanted to get along, down there, and not up top. I wouldn't do that now. Okay. And now I would look, our level on the downside is down at 89. That's where I would look to my next level of support. And then down at 80. I can see 83 too. But we'll do 89 first, and then we'll see what happens. All right. So that's gonna take care of that. Timmy, you're around? Don't get upset, Timmy, but I'm gonna go play golf today. Don't get jealous. Going to the hill. Going to the Willow Hill. 9 holes. Hopefully my back doesn't kill me tomorrow morning. It's going to be really windy too. For those of you who are not familiar with Chicago, Willow Hill is the highest point in Illinois. And you can, on a clear day, you can definitely see all the way to downtown. So. Yeah, it is. It is the highest point in Illinois. Yeah. Well, it used to be a garbage dump, right? That's where and then they just put all that stuff over it and made a golf course out of it. But it is the highest point in Illinois, and you can definitely, and it gets really, really windy up there, especially in the windy city. So gotta keep it low. So we'll see what happens. Hey, it's supposed to rain, so hope the rain stays away, but we'll see. But you know what they say, it never rains on the golf course, so I'll stick to that theory. All right, coming down here to 89 area, in case you thought I wasn't watching. We said we would not buy the 95, 96 that time around. Willow Hill is not next to Loyola High School. The Loyola High School is right on. That's another golf course that's right off of next to Loyola. This is on Willow, which is down the street. Willow and Waukegan Lake. If you're familiar with the area. Loyola is on Lake Street, off of Lake Street. And the next exit after that is Willow, so going north. But you're close. There's another golf course right off of that, right off of Lake. All right, Don has 93. We've got 89. We drip down here to 91. So we're seeing what happens. All right, nice trade there, Maureen. Yeah, that's right. Well, Maureen, hopefully you had a nice little trade there for you. Nice trade. Yeah, it's very windy up there. It could get a little well, that's because, like I said, it's the highest point in Illinois, so it might be 70 down there. It might be 50s up there, right? Absolutely. But on a nice sunny day and clear day, you can see the tall buildings and from downtown from up there. It's beautiful. It's a gorgeous view for sure. I can't see the beach. No, I'm sorry. No, not yours anyway. Not the one in California. All right, we're dipping down here to our 89 area. All right, quickly coming down here. Can't keep your stops in, whatever they are. And I kind of just busted through here just a little support right in this area here, but look at 83, a little bit better if you're trying to find a little backup, but see what it wants to do right around here. All right, giving you a little chance to get out of some if you bought them. Don't like the price action. Sometimes it's nice when it does that for us to lessen the risk here. What are you over trading, Maureen? 2 trades in less than 5 minutes? What's going on with you? You okay? Oh my gosh. Oh my goodness. You're trading so much, you're getting me dizzy. My goodness, 2 trades in less than 5 minutes. Amazing. Well, that's good. 10-year levels, and that's all that matters. Nope, you can't. Absolutely not. That's what I say all the time. That's my excuse. That's my excuse. That's not your excuse. That's my excuse. That's my excuse for trading too much. But now you know. All right. So we definitely quickly rolled on there. We got down to 86. So obviously, if you had a mechanical stop in there, you probably got stopped out. If you had a finger stop, you're working it back up here a little bit. Again, gave you a chance to get out of some. Maybe keep a little bit more for a rotation up. But you got to manage this one. This one I had to work a little bit. They're not always going to be simple, easier. Sometimes, unfortunately, you got to work some. Yeah, I'm joking with you, Maureen, right? Actually, I love the fact that you're trading more. Good trade there, HD. Sometimes the best trades, you know, what do they say? Sometimes the best trades are scratches. I'll be the first to tell you that I can give you tons of stories about some of my best trades being scratches. Trust me. They were ugly. And you don't feel good while it's happening, let me tell you. Good, Maureen. Fantastic. Good to hear. Well, I wouldn't go to that extent there, HT. I wouldn't say like you were in the electric chair. Let's not get carried away. We're not dying here. All right, if you were able to manage that trade just a little bit, I know it's tough sometimes because of the quick movement, but I did tell you that there was a little support when it got down to that little area. That was my secondary support. I quickly mentioned it when it was down there. I was hoping that maybe if you had a finger stop, obviously if you got a mechanical stop, you got stopped out. I get it. And like I said, there's many ways of trading, right? And if you feel comfortable with a mechanical stop, that means the stops are already placed in the market prior to you getting in, or when it gets, then it's fine. I just because I have been trading this way all my life, nobody really gave me a mechanical stop in the pit. Only my pain got me out of the pit trades. If you can understand that. But I know, I have my area where I'm focused to get out, and that's what I try to do. Sometimes it's going to cost me a little bit more. Sometimes I'm going to be able to rotate the market and come back. Those are this is what I'm giving up on one end to get on the other. But if you can't have the ability, if you don't have the ability to do a mechanical stop, then just, use your, if you don't have the ability to do a finger stop, then use the mechanical stop. Yeah, well, didn't matter. I would think we had, it was definitely a little support area down. The secondary support was right at that level. So hopefully you were able to work that trade a little bit down there. Remember, I always say that you need to find that secondary support level to help you out, or resistance, depending on the situation. All right. Next level on the downside we have is down at 80. 83, a little quasi support, but if we get below 80, could be a good level there. I do like the 80. 80 was a good level yesterday, so we'll see what happens today. Anybody have any questions? Again, chat box area. You can chat. We can discuss what's going on or not. Don't have to. But if you want to know what we're doing, how we're doing things, what we're trying to accomplish, how we're trying to accomplish them, we are trading many S&Ps. We're looking for ebbs and flows of the market. Thanks there, Fred. Patience is important sometimes. I agree. It's hard to teach. That's the hard part. That's almost impossible to teach. It's like I coach basketball. There's two things I cannot teach, right? I cannot teach speed and I cannot teach height. I can teach them anything else, but I can't teach speed and height. I cannot teach patience here in futures market. I just can't, which is understandable. I get it. Those are things that sometimes you just have to accept that I can't teach, but I try to make it comfortable for everybody. And so by being comfortable, you try to teach that patience part. Sometimes it works, sometimes it doesn't, but I try. All right, so that's where we're at. Can you teach golf? You kidding? Can somebody teach me golf? Can I teach golf? Are you crazy? A game nobody can teach that game. Crazy. Even though my friend taught me how to play. My friend taught me how to play. And he's got some issues right now with his health, and it's killing me to hear it. It's killing me to hear it. I can't even it's getting old thing. It sucks. All right, 80, next support level that we have. Again, anybody have any questions, feel free to ask away. All right, market continues to downtick here. The next support level we have is down at 80. Our green band and blue band in our hourly is down at 77 area, so a little area there if you're concerned. I think they might be voting on the bill either tonight or today, I think, or tomorrow. Either way, it's gonna pass. So there's not an issue as far as it not passing. And if there is, the market is really going to be surprised. That's about all I can say. Then let's look out below. That thing doesn't get passed. You guys see that Pierce Morgan guy? I mean, the guy walks off his own show and gets fired the next day, the same day. The guy walks off his set on his own show. I mean, I think it was his own show. I mean, I don't know what's going on over there, but the guy walks off his own show and then gets fired. I mean, what the hell's going on over there? All right, coming down and support at 80. Don, it is taking its long way to get to 95, yes. Okay, now you know what Don needs. He's trying to find the long road to 95. As soon as he said that, look what happened. The market's trying to find a shortcut. This is what Don tells me all the time. I can't even share all these things with you because it's like he gives me these targets are like, I'm like, okay. We're going the opposite way, and then the blue band gets in the way, and he's like, what? How do you want to get to 95 if the blue band's in the way? And in this case, it's not. But in other situations where he's giving me a level that he's expecting the market to get to, and it's going the other way. And even if it reverses, the blue band gets in the way. And I think he doesn't realize that when he tells me that the blue band's in the way. It's a little bit of a problem. He's colorblind, I think. All right, it's kind of hanging down here. So, see, this is he is the epitome of patience. He says, "Give it a minute, it'll be there." See, I mean, how many people can say that? That's the epitome of patience. Don, Texas. That's what they do in Texas. They got plenty of time to be patient. All right, like I said, the man's got patience, right? Got the 95. Of course, what does he tell me next? I'm looking to go back to '08 now. That's what he tells me next. And then he says, damn blue band is getting in the way. Man's a one-man show. I mean, you know, that's why Don's in here. It is the most popular host I have. That's the reason. That's great. And he knows what he's talking about. Hey, Mark, you know, you gotta help out a little bit more to be his wingman. Mark wants to be a wingman really bad. He's really, you know, as long as he Play-Doh's out of his headset, he's almost there. Don wants a little bit more sand from your beaches, he said. Next time, could you help him out? One thing Don doesn't have, he doesn't have sand on his estate. It's got a lot of oil, but not sand. All right, coming right up to our blue band here. For you blue banders who are trying to take advantage of the blue band. Blue band, always a nice little trade for us. As you can see, stopping, it's especially when Don needs a target. Blue band gets in the way, you gotta love it. Don's first target got hit, now he's looking for a second. When the blue band came right into play, just like it should. So hopefully you were able to take advantage of blue band opportunity there. I mean, there's different opportunities in the course of a day. Some price action ones, obviously. I don't always tell you right before it happens because it's not right. All right, nice rotation there off of our blue band. You blue banders in California should be happy. Very much so, he says. You know, you guys are a good mix. You know, Mark can teach Don about the blue band, and Don can teach Mark about patience. So it's going to be a good match. You guys could be good together. You know that Don definitely has like dreams about blue bands getting in the way, and like nightmares. Sees blue bands all night long. All right. All right, so hopefully there were a couple little trades there along the way. We obviously had to work our downside there support at 89. I did say the 83 area might be good. Maybe you were able to take advantage of that. Well, you wouldn't do it now, HD, because it's too late, right? Had to do it before. Okay, so I would have done the lower end. Well, I would do 7.5, 9.5, somewhere in that range. Yeah, yeah. Either one of those actually would have been okay. I mean, either one of those. Well, all depends on uh, either one of those would have been fine. Actually, I don't. They're What if I tell you all of them? That way I'm not wrong. No, I would probably do the first one. Oh. Yeah, I mean, it's just what you're comfortable with, you know. Look, the more you do it, the more you're going to use it. The more you're going to. It won't matter because it'll work enough times that it'll make up for all those. It just works. Just hate to say it, it just works. What can I tell you? You really want, the one who's. You should actually next time Mark comes on, you could ask him how he enters his trades around the blue band. His eyes light up every time it comes close. That's all. That's what I'll say. All right, we're kind of holding here below. Blue band, a little bit of. We got to get above 90. Not 90, even 39 even, out of any shorts. And for it to go up to make to the new highs, you got to get it above 05. Out of any shorts at 39 even and above 05 for it to go up to the highs there. Maybe beyond. But at least if the market can stay below even, you can try to get short someplace. How's the weather? Well, I'm going golfing today, so take it for what it's worth. It's a little windy, I will admit. It's a little windy, but I'm going to give it a go. See what happens. That was a suggestion that Mark suggested, that you don't have to worry about the blue band if you just take all the bands off your charts, which is what he did. He listened to you, Mark. He just took them all off the charts. He's like, I don't have to worry about the blue band anymore, except when he looks at my charts. And then I have me talking about it. Out of sight, out of mind. That's what he said. There you go. All right. That's how down works. Just take the blue band off the charts. DO8, yeah, looks a lot better. Yeah, that's true. Anybody have any questions? Please, comments, good or bad, write them in the chat box area. It's hard for me to talk all day. I have no idea which way the market's going. I'm just, if it gets above even, we might get up to the, we want to be out of any shorts. And if we get above 05, the market might go and retest the highs. That I'll say, but is it going to go up? I don't know. No idea. Not here to predict markets. I'm just going to give you levels and, how they're going to trade around them and what I think might happen if a certain level gets triggered. That way I try not to predict. Not good for me to predict. Not my favorite thing to do, actually. But I gave you levels where you definitely want to be out of shorts and or maybe a rally point. But unless there, I guess you can be short here. If we get above even, you don't want to be short anymore. So if you're looking for a trade, that would be one around here, at least for a time being. But basically, I'm not doing anything right now. Kind of going to let the market kind of do its thing. You always want everybody wants like an easy answer. Which way is the market going? It's a tough question. I wish I had the crystal ball thing, Don, you said you weren't looking at the blue bands. You took them off. You lied. They're running over the blue band right now. Don, you told me you took it off your chart. Now you're like, Oh, you saw my charts. Okay. Good out. Well, we didn't. It's testing this even area here, so obviously this is where if it gets above it, you want to be out of any shorts, and that's what it's doing right now. And if you, well, I said I wasn't doing anything before, so gets above '05, might have potential rally going forward, maybe to the highs there. All right, we're trying to hold here now above our blue band, but again, if it were maybe turning a little bit bullish, but we definitely have to get above '05. Like I said earlier, it's getting to this no trade zone here. We're trying to hold now above our pivot, so maybe, but that's what's going on right now. But again, we had an interesting morning, had a few nice trades, and now we're just kind of bouncing around here a little bit, getting a little bit choppy. But we need to get above '05 for us to rally. We hold the blue band, maybe. Maybe we can continue to push to the upside if we hold. It's tough. It's tough right here. But you have our parameters. We're flat. That's for sure. Got nothing going on. And kind of just waiting for the market to give us the next direction. All right, you can see here, as long as we kind of hold, well, I can't say nothing. It really could go either way here. Really good. So, got no opinion, no. Again, anybody have any questions? Good time to ask. We'll take a little bit of a break now. Probably won't get back the rest of the day, but we gave you some parameters here. Next support level on the downside is going to be the 80 area. We have our levels from this morning. The market seems to have, sucked out some of the volatility now and just kind of just hanging here. We'll see what it wants to do. Again, no opinion right now. It's kind of hanging around our pivot here, maybe trying to hold our pivot, maybe a rotation up, but we definitely have to get above 05 for it to continue to rally up. Downside support would be 80 and then use the other levels that we've given out, or if we can reprint the levels in the chat box one last time here for you. There they are. So use those levels as a guide. We've had, it wouldn't be bad to have a nice relaxing kind of day to day where things are not going, moving around so fast. And there are the levels in the chat box area for you as, like I said, a guide. Obviously the 89 got triggered and the upside resistance there at 06 got triggered. So those are not come into play, but the other levels do come into play here a little bit if you're just looking for those levels to see. Again, we have price action opportunities that occur. We've had those during the course of this morning. And now we're just really, market could go either way here. Kind of rejected the push to the upside. It's coming back here to our pivot, kind of just hanging here. Could go either way. It's very, very risky at this point to try to guess which way this market wants to push off of. So be a little bit careful. Market might be just taking a breather, especially since they're going to be passing the bill today. So I think they're going to be passing the bill today. And if that passes and nothing happens, well, then we'll see what the next focus of the market is going to be to keep us entertained. But we'll find out. All right. Get back here in a bit.
Hey, a couple quick shout outs and programming notes. Right now, we're coming up on the noon hour. Our trading concentration is the morning session. Can certainly bleed into the afternoon session based on trading activity, but we like to be done and have banked our money early. We start here at 9 a.m. Eastern Time. We go through the morning session together. The day starts out with Saul giving out his proprietary scalping levels and zones. We have a bunch of great people in here in Zoom. So if you're coming in from the outside, look for the link. Log in free now at www.zoomitlive.com. If you are interested in Sol's monthly, uh, raise your hand and I'll send it out to you. Carla, welcome. Hey, Carla, let us know if you have any questions. I can send out the opportunity to be part of Sol's monthly. What I'll do is I'll send you out a little description and a link. I'll send it out to you in chat form in GoToWebinar. For those that are joining us on the outside, if you want to take a minute and come in and join us live in Zoom, that'd be great. And again, we start here at a little after 9 a.m. Eastern Time. Hey, Leland, this is coming out to you now. Carla, I sent it out to you. Hey, Anupam, welcome. Good. Nice to see you again. Hey, Biger. Hey, Chad, how are you? Dean, Don, Dove, Frank, Glenn, HD, Joel, KG, Kurt. Hey, Maureen, Pedro, Peter, Timothy, Warren R. Everybody else, welcome. Hey, HD. HD, I see that you're happy to be back in the refresher. That's great. Well, that's good. I'm glad it's working out for you. And again, don't hesitate to ask questions and join us. Well, HT, that's great. I've been trying to switch up a couple things as far as distribution access. I think I got it pretty close to being okay. So again, those that are joining us on the outside, take a moment, join us on the inside in Zoom. I just sent out a link for everybody. Check out the link. We'll close it out around 12:15 p.m. Everything we do is for educational purposes only. Nothing is to be taken as direct trading advice. This is an educational service only. And I'll be in the background if anybody needs me. Leland, let me know how you're making out. Carla, let me know if you have any questions. It's like everybody else is in good shape. Hey, quick shout out for those that are joining us on the outside of Zoom. You have the opportunity to join us on the inside. You can do that by following the link www.zoomitlive.com. I'll send out a link. The link's out to you now. We're going to be wrapping this up around 12:15 in a couple minutes. For those that are in Zoom, no problem. Those are in on the outside. We're here from 9 a.m. A little after 9 a.m. We concentrate on trading based on price action during the morning session, which is coming to a close. We look to be done by now based on the price action and price movement of the S&P 500 E-mini. This is a orderly, disciplined approach to trading the market intra-morning and looking to bank our money and be finished for the day. So if you have an interest in that, let us know and we'll be glad to work with you.